Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is finally Tesla earning day, as Tesla earnings day is going to be today. And here's what I've done. I sold a lot of my positions this morning, and unfortunately, I kind of expected the market was going to take a pullback, and it definitely did. But interesting news also on GameStop and the short squeeze that's going on there. So I'm going to talk about that a little bit too. But first, I want to get into the slides and see how they are doing. So hopefully, let's see if we can get that slides going. Got to get back to that. Got too many controls here. There we go. Oops. All right, so let's see if we can get back to those slides. There we go. All right. Start out with the market direction. It seems as if we're still in the confirmed uptrend, which is a good thing. Definitely a good thing, but the S&P has been selling off, and some of the Dow stocks are down too. Dow is, when the slide was taken, Dow was down 600, and I think it's being led down by Boeing. Boeing might be a good short here coming up, but right now it seems like the market is in a bit of a retreat. We'll see. We'll see what happens. There's going to be some big earnings. Apple has been pulling back a little bit, and of course Tesla pulled back. We'll see what happens on earnings. This is one of the reasons why I always recommend, if you're unsure and you're coming into earnings, you might want to, always consider lightening up on your position, because that can be, it can be problematic. It can be absolutely problematic going into earnings like this. So you got to be super careful when it comes to that. So basically, I'd like to show you, first of all, the S&P, and we're definitely down on the S&P as of today. But not to worry, not to worry. We've pulled back here 10 points. Now we're still above a very key level. I think it's about 350. And that's this level, basically right about here where we started the run. This was this is sort of where we began. This is on the S&P. This is sort of where we began the run, right at this level here. And that's actually about 360. So we're still moving very nicely up the 40-day average, but there's been a huge pullback. Now, the question is, can this turn into potentially retreat? Well, we're going to have to wait for this week, but if it pulls below the 40-day moving average, that's very key, and that would indicate a change in overall direction. Currently, we're still in upward trend, but we've had a very, very strong pullback, and that's significant. Now, one of the things is about this is, we have to be on the lookout, because if we do go into a market correction, then we're going to have to look at our portfolios and probably rearrange them. I've been starting to move to cash a little bit in anticipation of something. Again, we're still in the market in a confirmed uptrend, so I'm still looking for those stocks that are going up. But, we may be getting close to a little bit change in direction here. We just don't know. The QQQ Trust, now this is all the good stuff. This is all the growth stocks. This is, Microsoft, Apple, the whole thing. By the way, Microsoft blew out its numbers yesterday, and guess what? The stock went down. So that tells me something. It tells me that we might be, the tides might be turning a little bit. Typically, January is a very good month in the market, typically. February, it could get a little rocky. That's just based on the investor's almanac. But so we might want to consider, kind of looking and being a little bit more careful about our buys right now. But the Invesco QQQ Trust, the key level on this one, I think, is about 305. We're still well above that 318. So we're still good, but we've been pulling back, and we may have a situation here shortly where we may be the market direction may be under pressure. Just wanted to show you my portfolio. I've been lightening up, as you say, as I can say. I'm still in Tesla, but I did sell about half of my positions this morning at about 870. When this slide was taken, of course, it was 863. So, if it comes through earnings well and moves above 880, I'll probably be a buyer again. But I definitely wanted to lighten up because I kind of felt that, based on the volume and everything, it was pulling back a little bit. Amazon. It's still above the key level. My key level on this is, because I have a spread on this one, is 31.30, and hopefully that'll maintain that. It's down about $109, but it's still above that 32, so hopefully it can hold on to that. And I'm still positive on that trade. On Palantir, interestingly enough, Palantir is going up. So there's always somebody that's bucking the trend. So this might be one you want to look at, is Palantir, because look, it's up 10%. Wow, Kazowie. Up and on a normally down day, it's up. So that's something you might want to look at, possibly, as a potential trade there. Okay, well, thank you for hanging out here. Let's see if we can get to the questions. If we can get to the questions, pull up that. Yeah, there we go. Okay, great. All right, so now let's take a look. Let's go over to, and I'm not going to take the first one on the list. I have to be, well, wait a minute. Oh, okay. Well, let's take the first one on the list. Hey, Gunnar, thank you so much for, for watching. Really appreciate it. Let's look at IBM. IBM, I haven't been in IBM in ages. And I just, overall, I'm just not really a fan of the chart. Let's kind of take a look at it. I'm going to kind of see if we've got anything going on here in terms of the chart. So, it's just kind of just this gently sloping down chart. It has a relative strength of 13. I'm just not feeling the love there on that one. It's got, it's decreasing sales. I'm not liking that either. And, we still have a very nice cash flow. And the return on the equity is just stellar at 38%. But unfortunately, because we don't have preferred shares, we don't get that. So here's what I would say. And by the way, I made a little short video this morning on dividend stocks versus growth stocks. Well, typically when stocks start paying dividends, that's sort of when their big growth phase is over with. And of course, IBM has been on that for a long time. They've been paying dividends, I think, since about the 1960s, at least. Still got a lot of funds in there, and that's good. But I just don't think that this one is going to make you any money. Let's look at the checklist. It's it's 4 out of 9. That's not good enough for me. And the funds, well, we do have funds in them, because this is, interestingly enough, this used to be a Dow component. I don't think they are anymore. The funds have been going down. So unfortunately, the last CEO of IBM, I think Gina was her first name. She did a lot of damage to the company, and I don't know if they can repair it. So I am not a fan of this at all. Let's look at the week. Let's look at the monthly chart. Just kind of give you a kind of a 25,000 view point of view. Okay, the reason I go to a chart that's out as far as the monthly chart is I just kind of want to look at the overall trend of this. And the trend is just, it's been slowly down. This is what they call managed decline. It's funny because I remember when a time, I'm old enough to remember a time when IBM just dominated the computer business. Not true anymore. It's just, this is managed decline. I think you want to run away from this one. Here's the thing, sometimes you can buy bargains, but most of the time when you buy bargains, they're bargains for a reason. And I just don't think you want to be. I just don't think you want to be in this one. I don't think it's viable. I think you just want to. I think you want to avoid it. I think you want to avoid IBM. It doesn't. It just doesn't look good. It just doesn't look good. So sorry for that, but I think, Gunter, I think that I don't think it's good to be in the stock right now. I don't think IBM is going to give you the kind of the kind of results that you want. So I would be very, very careful about buying IBM at this time. So let's take a look at something from TikTok. Thanks for holding on, everybody. What do you think about GameStop put options? Guaranteed profit. You know what? Here's the thing about GameStop. I mean, okay, everybody now thinks that GameStop is going to. This could lead to a lot of tears. This could lead to a lot of tears. I want to show you the chart of GameStop. GameStop, very interesting case in which there were a lot of short sellers. GameStop was one of the ones at the top of the list, and a lot of short sellers. And people got together on Reddit, and they basically said, continue buying this and hold the stock price up. And what happened was this huge short squeeze that created this what they call this climax top. And this is the weekly chart, but let's look at the daily chart. It's even more pronounced on the daily chart. Look at that thing. It's just through the roof. Now, $338. Okay, well, the first person to sell is going to make a lot of money. The first person to sell is going to make a lot of money. And you might make a lot of money on puts, but this is just so weird. This is so screwy. This is sort of a binary stock. I mean, either you're going to make a lot of money on this or you're going to lose a lot of money on this. I just, here's the thing. If you want a lottery ticket, I think puts could be a very good lottery ticket. But on the other hand, I'm not in the stock, and I'm not doing anything with the stock because I just think it's just too difficult to gauge this one. I mean, it's literally up $190 today. Well, when this thing starts falling back to earth, and it will, because people will have to sell, it's going to be ugly. Now, a put might work, but then again, we might have another round of this. We might have another round of short sellers being taken out. By the way, I can't remember the name of the fund, but I think they came out of this thing about $1 billion. When you're shorting stocks, and if the market direction changes, I probably will be shorting stocks. When you're shorting stocks, here's one thing you got to be careful with. The float, it's important to have a little bit more float than this, because this is a relatively thin stock. That's part of what happens. It gets these climax tops, and that's definitely been the case here with GameStop. So would I recommend anything with GameStop? No. Here's what I would recommend with GameStop. Stay away. Stay away right now. It's too crazy. It's too crazy. You could make money, but boy, you could probably lose some money. So I'd be really careful with GameStop. I really would. Let's look at Nokia. That's Nokia. And this is sort of, what's old is new again, and it's just taken off too. Interesting one. This is another stock that's been shorted a lot, and it's just going up like crazy. Here's the thing about this. Let's take a look at the short interest on this one. Yeah. Okay. So we have about 7% short interest on this. And you can see at 1.2 days or about 7% short interest on this one. I don't know exactly why this is doing this, but again, this is another one. If I was in the stock from the buy point, and there is a consolidation buy point on this, and the buy point is $5.14, I would be pushing up my stop loss like yesterday's business, but it's only at 685. So here's the thing. I want to see this go above about 10 before I'm interested in it. Let's look at the checklist. The checklist just isn't good enough. It's 55%. The owners, we do have 99 fund owners in it. It has been decreasing, but it still looks like it's steady at about 100. I just can't recommend this one. I wouldn't be buying this one. It's got an excellent industry rank though, 15 out of 197. So here's the thing. I think with Nokia, I think you're going to have to avoid it. You might want to watch this, but this has to, before I'd even consider buying this, several things have to happen. First of all, the buying checklist is going to have to be at least 66% and preferably 75%. The relative strength here is 44. I want to see 80 on this. So we're just such a long way to go. So I have to, unfortunately, I just have to say thumbs down on Nokia. I have to say thumbs down on Nokia, at least from my perspective. I just wouldn't probably be in it. So sorry. Okay, question from Mr. Singh. Thank you very much for waiting, Mr. Singh. Let's look at Twitter, TWTR. And of course, this was pulling back, But you know, the thing about Twitter is they have a real business and they have a lot of very, very good advertising sales. So that it's not necessarily a bad thing. Still, it's a little bit low on the relative strength. Like a lot of these enterprise software, group here, the relative strength has been going down. I'm a little bit leery of buying something that has a 63 relative strength. I like to see it a little stronger than that, but we do have a lot of funds in. We do have a lot of funds in this, so that's very good. 1526 of funds is nothing to sneeze at. The price, of course, is 48.51, and it has been sort of rallying, but the checklist just isn't good enough. It's 44%. I just think that let a better opportunity come along. I think with Twitter, I think that it's the kind of thing where I think you're going to probably have to wait on that. I might watch lists. I don't really even think. I don't like to watch list them unless they're coming in on a relative strength of about 80. I'm always looking for high relative strength stocks. Why? Because I like to typically buy in the top of the market. It's just easier to find winners there. So what I would say about Twitter, I say probably you might want to keep it on a list, but I think you want to kind of pass on it. I don't think it's gonna give you the kind of results you want. Let's look at PACCAR. That's probably a really good reopening stock when the economy starts to reopen. They're an extremely large manufacturer of trucks, and so that's a good thing. But again, and they've moved above this. This neckline here, but they've got declining sales. I think that this is going to be tough. I just don't think it's time to buy it. Relative strength of 50. Yeah, I think that we do have a nice pattern here with a cup, but 50 just isn't strong enough for me. Wow. 4 out of 55 relative list. We do have good funds in there. You know what? Here's the thing. I think, Mr. Singh, I think you're going to have to. I wouldn't even put this on the watch list. Not that it's a terrible stock. It's not. It's just that it's just not in the season for it. And so I don't think it's a very good bet. I really don't. My opinion, though. Hi, Jim. What are your thoughts on Wall Street bets? Reddit page driving GME in it. Well, I think it's really interesting. I think it's this is a great question, Jeff. I think this is the start of something new. Of course, a lot of big hedge funds lost a lot of money, and when that happens, they've got a lot of friends in Washington. So you can expect more curbs on freedom of speech. Listen, I'm all for chat rooms, and I'm all for the little guy getting together with the other little guy, because I consider myself a little guy. Okay, I'm not an institutional investor. I have no inside information, but you know what? I think this is I think the fact that people are getting into chat rooms and discussing things, I'm all for it. The problem is, I think that the way that works, unfortunately, is that they shut down Twitter from the former president. And, I suspect that SEC is going to come in and probably try to shut these guys down too. So, I think it's fascinating that it's happening, and I'm all for it, because I'm a big freedom of speech guy. And, first it's political, then it's monetary, so I don't like the fact that, but I suspect they're going to try to put the kibosh on it. Now it's very interesting. A lot of the retail stocks, and like AMC, in the retail space, they've been feeling the pain, and so I can see people coming in and buying them. I in particular don't like them because they don't follow the CANSOM model, which I follow. I don't like to buy them. Usually they have low relative strength, but it's a free country, at least it used to be, and I think it's very, very interesting. I definitely think it's you can push the stock up. Now, here's the thing. I do think they're going to try to regulate it. And the reason is because there is, there used to be, prior to some of the SEC regulations, it used to be that, the big hedge funds, they'd call up the CFO of a lot of companies. They say, how are you doing? And then they would adjust their positions in that way. They can't do that anymore. There's a quiet period before earnings. So that's why, when I'm looking at earnings, I'm always looking typically, and here's the thing, I usually look typically to for the earnings to pull down after earnings, even great earnings. Really good example is Microsoft. Now I didn't have a bull call spread on it, but I was expecting Microsoft to pull back. The same thing, of course, with the put spread that I put on Tesla. I expected to pull back a little bit. That's common. So I do think, though, it's very interesting, and I don't necessarily think GameStop should have been shorted that much. But the thing is, if on these rapid these rapid climax tops, you can play them, but you got to be extremely careful, because when they pull back hard. So if you get into these, if you see a climax top happening, get it in, and then just put your stop loss in just immediately at 2.5%, and then push it up. And then when it pulls back, sometimes you do well. I was doing this with Tesla last year, starting in November, when everybody was trying to short it. I was long it. I was longing Tesla. That's really when I came into it, and I did the same strategy every time. I'd buy the thing, I would push the stop loss up, and then it would pull back, and then I would be sold out. So that's not a bad strategy. You could definitely make money in that. So what I think is, unfortunately, there's going to be more regulation in this area, because, these guys, these big hedge funds, they control the media and they control the government. I'm not a conspiracy theorist, but they're big donors, and so I do think there's going to be more regulations. But I think it's fascinating that the little guy is actually getting a break. So that's my opinion on it, anyways. Hopefully I won't be censored for that that opinion. But very interesting, very, very interesting question. And again, I'm not in Bed Bath and Beyond or in GameStop, so I really don't have a dog in that. I don't have a dog in that fight. So, but it's very interesting. Very interesting thing has gone on. Okay, so Mr. Singh, great. Thanks for waiting here. I'm out of Tesla and riding AKAM. Let's look at AKAM. I'm also partially out of Tesla. I'm not totally out of Tesla, because I did sell a call option on a 990 call option with an expiration in February 19th, I believe. I believe it's February 19th. And so I do have some underlying shares, but I did absolutely. And you could look at the small, if you have access to the small portfolio, you'll notice that the small portfolio, at least my portfolio, it's all in cash right now, because I did sell out of Tesla. We made a nice little profit, but we're going to be waiting to see, kind of how it comes through earnings. This is one of the reasons why, when a stock comes through earnings, you want to be super careful. Ooh, look at that, Akamai. Akamai is what old is new is get. I remember when I lived in the Bay Area, Akamai was just a tremendous company. Some friends that worked over there. It has moved above that consolidation stage 128. So that's looking good. But we're right at the neckline. So here's the thing I would be careful with. We're still a little bit low on the relative strength at 33. Not a bad time necessarily. I typically don't like stocks that have a low relative strength, but part of the reason is because of the overall market. So, I'm pretty familiar with this company. We have nice sales growth, which is good, and we have that. We just starting to see some nice buying coming in there. But let's check our checklist. Okay, it has 6 out of 9. That's my minimum. Okay, so that's good. And we do have, it's not really increasing fund ownership, but at least it's steady. And at 1821, that's a lot of funds in it. Good. But the industry rank is 127. That's the computer software enterprise. That's as of this week. We have seen a movement out of some of the computer software and enterprise areas because there's a lot of profit taking. This is another thing, too, you got to be wary of. Typically in a new year, there's a lot of stuff that goes on in February. There's a lot of profit taking. A lot of people will will look at the year. They say, well, I've made all this money in XYZ. I'm going to sell. So that sometimes starts to happen, after the first of the year. I do think, though, that'll firm up a little bit. Here's my thing on Akamai. I think with Akamai, you've got to be very careful in how you trade it so that it won't pull back drastically on you. Here's the thing. It did move it moved above the neckline, which is good, and then it pulled right back. So there definitely are, it looks like the weekends have been pretty much pushed out. Wait to see how this goes. I suspect it'll fall below the pivot, and it will probably come back closer to this neckline here, which is actually 116.39. So I think that if it pulls back a little bit and then it restarts, you could definitely come back into it. I wouldn't buy it at this level. I wouldn't buy it at this level because I don't think there's enough support for it based on what I've seen. Here's the thing. Wait for it to pull back a little bit. But if you're in the stock already, start pushing your stop loss up. Make sure that and you want to have your stop loss very tight. I would say 2.5%. So even if it pulls back, you will be able to capture some of that gain. So be a little bit careful on this one. It may strengthen up, but right now, it's a little bit in the beginning of the stage, so it's a little bit harder to do this. Hey Sid, good afternoon, Jim. Would you please analyze ZI? Let me analyze that one. Okay, great. Thank you. Thanks for that. ZI. Let's look at it. Ooh. Of course, it helps if I don't fat finger it. Here we go. Zoom Infotech. This is a Chinese company. The first time I looked at this one, I thought, oh, well, this is Zoom. But wait a minute, the price is too low. This is not Zoom, ZM. This is ZI. And this is, kind of like Zoom, but in China, I guess. Anyways, it's below the 5308 line. It looks like it has bounced off the 21-day. It's got a relative strength of 59, excuse me. Let's look at the weekly chart. Let's just kind of look at the weekly chart, and we should look at that first. Okay, it's a relatively new issue. It's only 3 months old. It's an IPO. Okay, this has an IPO base where it comes out of the gate, it moves up, and then it moves down, and then it's come here. Now, here's the thing. This isn't really buyable right now. You want to wait for this thing to move above the consolidation at 53. So where would I buy this? Well, if I were going to buy this, I would buy it at $53.08 plus 10 cents. So I would buy this at with a buy stop limit order at 53.18. If it went above that, I would buy it. Right now, it's 49.96. So it's really not time to buy this one yet. But let's look at even if it is buyable. Well, the checklist is good, 6 out of 9, so that's good. The ownership is very interesting. Okay, no insurance companies. Okay, good support from funds. I'm liking that. Let's look at the sector. Okay, 127. Not so great on that. All right, and the relative strength is 59. Here was the thing. I think that once you got to do on this one, I don't think it's buyable right now, and I don't even think it's buyable. Really, I don't think you even really want to buy it at the first stage consolidation. I think if you buy this, if it goes above about 64, that's where I would buy this. If it went above 64, so I don't think right now you want to be in this one. Now, if you're in it, just push your stop loss up. Make sure it's pretty tight because I do think, based on what I'm seeing in the market, I think that there is a little bit of a and who knows, you can't, it's very hard to predict the future, but I do think we're going to see a little bit of a pullback in the market because the market has been moving up so fast. And if that happens, then a ZI would probably be one of the first on the chopping block. So I don't think you want to be in it until it moves above 64 right now. That's just my opinion on it. All right. So thoughts on WYY. Let's look at WYY. All right, WYY. And that is Wide Point Corporation. I don't know why. Oh, it's in Fairfax. Interestingly enough, I went to Langley High School, and that's right around the corner. And look, it's almost good. It's 96. It's looking pretty good there. It is a blue dot special, That's a pretty good thing. Let's look at the checklist. 77. That's very good. 13% funds in it. Not a lot of funds. Pretty thin. 17. Okay, 60. That's good. Here's the thing with this one. Right now, tactically, I probably wouldn't be a buyer today. I know I sound like a negative Nelly, but I would definitely watch this one. Definitely would. Because on the first stage cup, the buy point is 15.88. So I'm going to put that out there. On the buy point on this one, and this is potentially buyable. This one, this one is potentially buyable. So, but the question is, where would you buy it? And that's always the, that's always the issue. That's always the issue. So, for this one, which is WYY or Wide Point Corporation, the buy point on this one is let's see if I get it exactly right. Yeah, it's on the cup 1588. Put that in there. Yeah. And so that's the buy point. Oops. Well, it would help if I got if I had. There we go. WYY. The buy point on that one is 1588. So here's the thing. If it moves above 1588 plus 10 cents or 1598, then you could possibly buy it. But right now it's at 1228. So it's really not, I wouldn't recommend buying this one right now. I wouldn't recommend buying this one. But I watch listed, let it get to the buy point, move above the buy point about 10 cents. And then I think that you might have one that you could buy. You could buy. So I think that might work because everything else looks good. It just needs to come up to the buy point. What do you think about GameStop put options for 2023? Guaranteed profit? No, I think you really have to. Here's the thing. I'm not participating in this just because I don't have an edge. Okay, and I like to look at everything where I have an edge and I can get into it. I don't think I really have an edge with GameStop, but I don't know anything more than anyone else. So I would probably pass, to be honest with you. I would probably pass on that on that gambit. I probably wouldn't take that just because I think that it could end in tears. You could do very well, but you could also end in tears. What do you think? And this is coming again from TikTok, Mike_3. What do you think of Apple earnings? What do you think of the Apple's earnings call? Well, I wasn't on it, to be honest with you. I wasn't. I'm trying to give it to you straight. I wasn't on the Apple's earnings call, and why? Because I actually sold out of all my Apple positions, maybe too early, but it just wasn't. They just weren't acting right, so I blew them. I blew them out. But it looks like it's moving up. So things looking pretty good for Apples. Sometimes you just don't get these right. But here we go. We came off this. We're still in the buy zone. We're still in the buy zone here, and this is the call is looking okay. Yeah, okay. There's the buy point. The neckline is at 137.98, and we're at 142. So we're right in the buy zone. So you could buy it here, but here's the thing. I don't get the warm and fuzzies off this yet. Let's see how it trades. Let's see how it trades. Let's see what the conviction is. I'm seeing a fair amount of selling at this level. I just think there's a lot of people that have done very well in the stock, and there's a lot of profit taking. The rel stick is 82. That's not stellar, but at least it's pointing upwards, so that's good. And at least the 10-day line is above the 21-day, above the 40-day line, so at least that's lined up. Here's the thing. I'm really not at this point with Apple. And if you're trying to look for entry point, I'm not as high on it. It's still buyable, 6 out of 9, and the ownership. Everybody's in this fund. 5640. They're going to have great profits. There's no question about it. But Microsoft. But again, I think that Microsoft announced great profits, and the stock went down. So I think be a little bit cautious today. Today is a good day for a little bit of caution. Okay. Good afternoon, Jim. We did that. Okay. So sorry about that. All right. Let's look at this one. Hi, Jim. Got into Workhorse at 23 back in November. Should I hold while it's rising or take profits? Oh, this is a great taking profits question. I love this question because it's so great when people have profits. It gives you so many options. And congratulations on that. I think that was an excellent trade on Workhorse. I was very skeptical of Workhorse initially. I'll be honest with you. You know what? Here's what I would do. I'm looking at the chart right now, and it looks as if, let's look at the weekly first. We just have this beautiful pullback, pull up. It's up $11.29. So that is just stellar. And you said you got in at 23. Wow, look at that. That is beautiful. That is beautiful. Here's what I would do. Here's what I would do on this one. I would look to set my stop loss right about at this level here. Right here. Okay. So the stop loss that I would set on this one would be at about 24.50. Okay, so I would set it at about 24.50, and I would start. No, I'm sorry. Excuse me. Is that right? Did I give you a wrong? I gave you a wrong answer. Hold on. No, I would set it not at 24.50. Let's see if. Yeah, I would set it about 33. I would set the stop loss at about 33, and then I would keep moving it up. As you can see, I don't know if you can see that from that line there. It's right about where I'd set it. Why? Because I do think that, it may reverse and go higher, but you want to protect this profit because this looks a bit like a climax top and it may pull back. So that's what I would do. I would put it in there at 33. It's now at 34.80. If it pulls back and you get sold out, well, you're going to make a lot of profit. But you want to protect your profit at this point. You've got too much profit in there and you've been in it too long. Now, here's the thing. Here's the general rule. Because you've been in November, you've been in more than 8 weeks. Okay. If you make 20% if you make 20% and it's over 8 weeks, let's say you're up 20% and it's over 8 weeks, the prudent thing to do typically is to sell half your position and take profit and then protect the rest of the profit. Now, there is a corollary. There is another thing with this too. If you buy something up to over 20% in less than 8 weeks, you don't want to sell it. You want to continue to push that stop loss up and keep it. But because it's taken over 8 weeks for Workhorse to move up 20%, here's what you probably want to do. You probably want to sell half your position and take that profit. The rest, you want to set your stop loss and set it up right about 33. So if it does pull back, you've got that profit too. But this may continue to go up. But right now is a prudent time probably to be taking some profit. So that's a really, really good question. It's a really, really good question. And the funny thing is that, you can make, stock can go up and it can go down, and that's a round trip, and nobody wants a round trip. You want a one-way ticket to profit. So that's what you're trying to do. You're trying to preserve all of that really, really good upward, motion that you've had, and you bought it extremely well. So if you can make 20% in, about 2 or 3 months, that is pretty good. That's pretty good. It beats working for a living. I can tell you that. So you see, you're in a very good place. All right. Let's look at DraftKings. And that is, of course, symbol DKNG. And DraftKings. And it's pulled right back up. This is an interesting one. I do think there's a lot of future in online gambling. I really do believe it. And we're a little bit below the buy point. The buy point is 55.98. Now, reviewing this, what this is telling me is all of the weak hands have not yet been taken out. This is an extremely good pattern. This is a cup with handle. The question is, where would you buy this? I do think that this is a buyable stock. I really do believe it. It's got a relative strength of 93. That's excellent. It has increasing sales. I'm liking that. It also has extremely good fund sponsorship. 414 is the number of funds in it, and it's 37%. And typically, when a stock is moving from about 20% fund ownership to about 65% fund ownership, that's when you see the greatest increases in the price. And I like the overall chart. We have a very nice base pattern here. It's a cup with handle, and that's one of your best patterns. Let's look at the checklist. Checklist is 6 out of 9, so that's good. And the ownership is good. And let's look at the sector. Sector is 10 out of 197. So that's stellar. Okay, so what would you do? How would you buy it? Here's what I would do on this one. And this is what I would do. I'm not in the stock currently, but I do believe it's buyable. But I think you want to wait until it's just moved right up to about this level, about the 58.40 level is probably where you want to buy it. So here's what I would do with DraftKings. I would be looking to, let's see. I'm going to push it up here. Hold on one second. All right. So for DK NG DraftKings, I would set a buy stop limit order for. Let me see if I can get exactly where I'm looking at this chart. Right in the middle of the pivot, about 57.35. That's where I would set it. And the reason I would set it is because here's the thing. What's happened here is that it came up to the pivot here, and unfortunately it pulled back, but there's very strong volume here that you can see. Oops. There we go. There's very strong volume down here. So anytime that comes above that 40-day line, that's the red line there, those blue bars, that means there's a lot of volume. So there's a lot of conviction. It pulled right up to here, right up to the pivot, and then it pulled back. So if it makes another attempt at it and it moves just slightly above that, that's where you want to be. And I think that number is about 57.35. The advantage of doing it like this with a buy stop limit order is that you don't buy it until it's moving higher above resistance. And that's helpful because typically the way a stock moves is it kind of moves in steps. And you'll notice it hangs out, it sort of hangs out, and then it pushes through. And then when it pushes through, it goes higher. See how it did before? It came up to this resistance at 44.79, and it tried second time at 43.75, hit it twice, and it just couldn't go beyond that. Then it came down, and then up, and then down, and then finally, after it based, this is a base pattern, it moved above that 44.79, and guess what? Boom! It went right up. That's what I think is happening here. We're hitting this level at 55.98, and then we've hit it again, and then we've hit it again. So we've hit it 3 times. So we know that there's resistance there. So if we just put our buy stop limit order just slightly above that, when it smashes through that, then we probably will have a very good buy. So that's a very good question, and that's how I would buy it with a buy stop limit order. All right, great. This is Reminder full 00. Is that right? Okay. Hi, Jim. Do you get also the sense that the market is going to trend lower? Yes, I do. Absolutely. I think you're smart. Here's the thing. I look for certain bellwether stocks. Microsoft, it doesn't get more bellwether, at least for the NASDAQ, than Microsoft. I want to show you Microsoft. And what's happened with Microsoft? Now, Microsoft is moving up slightly today. Yeah, and it moved beyond. But yesterday when it reported, I want to kind of show you that. And this was interesting. It hesitated. Okay, now today it's pulled up again. It's up 57 cents. Not a lot, but it's pulled up. But here's what I think is happening. I think we're slowing down a little bit. And with Microsoft's earnings yesterday, it should have shot to the moon because they were fantastic, and it didn't really. It pulled back a little bit. Now it's coming up a little bit. So I do think we're starting to see a little bit of slowing in the market. So you want to get ready, possibly take some profits here, maybe get your powder dry. That's what I'm doing. I've sold out. I sold out of about half of my positions in Tesla. I sold a company called Prodigy. I'm out of that. I'm getting my powder ready ready for it to possibly a market change. And I'm going to obviously try to find the best stuff to get into, but right now I'm kind of moving into cash and being a little bit more careful about what I'm buying. All right. Okay. So let's take another question from, all right, let's go here on TikTok. We're looking on TikTok. What level of leverage do you use on Bitcoin? Well, here's the thing with Bitcoin. I don't use any leverage on Bitcoin because I consider Bitcoin a cash alternative. And so I don't typically like to leverage into positions on Bitcoin. What I do though is I use what they call the GBTC, and this is the Greystone Bitcoin Trust. So GBTC is the symbol for it, and this company holds about 4% of the world's Bitcoin. And I want to show you this chart because this is very interesting, at least from what I'm seeing. I'm going to go to the weekly chart here. There was a big sell-off in Bitcoin, and it's still continuing. And I'm not ready to get back in yet, but it seems as if they seem to be kind of a topping here on about 50. This is on the Bitcoin Trust. It's currently at 36. So we have fallen below the key level. This is the 40-day line. So, but we're still at 96 relative strength. Now, why am I going into all this detail? Well, I'm going into detail to show you that this is one of the reasons you don't want to be leveraged into Bitcoin, because if it's going up, you're going to do extremely well. But I'm only going to be leveraged into very high conviction trades. This is why I was leveraged into Tesla going into earnings, but the day of earnings, boom, I'm out. Why? Because if you're leveraged and it's moving up, it's all great. But if it turns against you, it can be very, very tragic. So I wouldn't leverage into Bitcoin at all right now, because right now the GBTC, which is the largest holder of Bitcoin as far as I know in the world, they hold 4%. It is down. It is moving down. Now, will it bounce? Probably, and it probably will bounce right about here. I know this because this looks like some resistance. So at about 26, and I think it'll pull back to that, it probably will be turning higher, and I probably will be a buyer at the time. But right now, I'm not. So be very careful with leverage. Leverage, you can do wonderful things with leverage. But the thing about leverage is that at the first sign of problems, you want to deleverage, because if it turns against you with leverage, it can be devastating. So leverage is a very, very good thing to use. I use it all the time, but I typically am very prudent about it. I had a lot of Tesla on leverage up until today. I sold out everything, all my leverage positions. Why? Because it can pull back. So I could have made more if I had been long everything. But I used leverage. I was able to double my position size. And then at the first sign of weakness, boom, I'm out. And that's how I do with leverage. That's what I do with leverage. And it can be very good, but you have to be careful. That's all I'm saying. When do you think the cruise industry will come back? Well, I can tell you how to find out. All right. I don't think it's coming back anytime soon. And here's why I don't think it's coming back anytime soon. In the ship business, there is, and I know I'm digressing here, but there is a place in Bangladesh. There is, it's near a place called Cox's Bazar. I've never been there, but what it is it's the place where all the ships in the world go to die. I think it's called Chittagong. I'm not sure if I have that name correct. But what they do is they take ships and they run them up onto the beach. It's a 70-mile beach, and people come and they take with blowtorches and they're like ants, like in the forest with leaves. They just cut up these ships and then they carry off the pieces to be recycled. Well, unfortunately, a lot of cruise ships now are being recycled. Why? Because it's more expensive. It's better to take the loss now and reduce the size of the fleet than it is to continue, with the myth of just parking the ship and having to service it without a potential of earning anything. I think that the cruise line industry is going to be hurt for at least 3 years, maybe longer. I don't know. People are going to go back to cruising, but they're not going to go back to cruising with COVID-19 out there. So I just think Royal Caribbean and a lot of these other things, Carnival, lines like this. I just think it's going to be consolidation. I just don't think you want to be in it. I don't think it's coming back, at least not for a few years. It will be back eventually, I guess like with the Spanish flu, I wasn't around then, after the Spanish, World War I happened, then the Spanish flu. And then, 2 or 3 years later, everyone was either dead or forgot about it. And the 20s were, absolutely a boom time. But right now, the cruise ship industry and resort industry in particular, it's just not doing well. I mean, Boeing, which is in a different industry, of course, they make airliners, but they are hurting. I mean, they are hurting. They're not delivering their planes. People just aren't going on vacation, and so I just can't think I just don't see how you can be, big into the cruise ship down. Here's the thing about this. People say buy low, sell high. Well, I don't agree with that, because if you buy low, you could be buying a lot lower, because a lot of these companies may go out of business. I mean, I remember last year when everybody was buying shares in Hertz, because they'd heard of the name, but it was a bankrupt company, and it ended in tears. And I think that's how, unfortunately, a lot of the cruise ship companies will be. So that's just my take on it. All right, let's look at Virgin Galactic, SPCE. Let's see if there's a place to get into this. I haven't been in it really since the first quarter, and maybe I've been mistaken, because look at this. We have a climax top. Wow, and we're earnings in 20 days. So hey, this is interesting. We might have an opportunity here for short-term trade. Wow, look at that. Okay, I'm starting to understand why we exceeded that. Okay, so it may be game on. It may be game on in this. Wow, it's up $12. You know what? This would be highly speculative. Of course, we've had a lot of buying going on there, but again, it doesn't really matter so much on this one. The earnings were 14% funds in this. Very, very interesting. Something must have happened that was very good, very bullish. I haven't been following this, but we're basically, look at that. Okay, so I'll bet you this is also a short squeeze, a la GameStop. So let's look and see. Okay, so we have 8. That shouldn't be enough for it, though. Okay. Basically, it's up 8%. So we have about 8% outstanding on the shorts here. So there must be a fair amount of shorts. Oh, okay. Okay. So here's what happened. It looks as if, okay, I do believe this will pull back, but we had a cup 35.82 was the last buy point. It's at 45. Okay. Here's the thing. Look for this thing to possibly settle and pull back. I definitely think you can watch this one. Here's the thing. If you buy this thing, do not, whatever you do, hold it through earnings. Earnings are in 29 days. The checklist is 66%, so that's decent. And we do have funds in it. You know what? This one might be a watch list. I haven't been in this one in a while, but this is a very interesting stock to me because, and I'm going to put it down here on my little handy dandy pad here, SPCE. I wouldn't be buying it today because I think it's a little extended. And I'm going to look at the 10-day line to see how far it's extended. Yeah, it's quite far extended. It's wow, it's 50% extended from the 10-day line. What I'm talking about here is that this is the 10-day line. This is a little pink line here, and then it's all the way up here. Now it's come back all the way down. It was up at 60. It's come back down to here. So it's about, let's see, 1, 2, 3, 4. Okay, 5. So okay, so it's about it's about extended 20%. Let's see if it comes down to about this 40 level. And if it does, I think you could buy it if it reverses. I wouldn't buy it right now, but I would definitely watch this one. And I'm going to actually put it down in my handy dandy. And I'll find an empty page. That would help too. So much on here. Okay, let's see. Find a handy dandy place to put this. But SPCE, there we go. Get my watch list. SPCE, Virgin Galactic, definitely on that watch list. And it's 29 days. It's earnings in 29 days. So very interesting, MAGA Homes. I think you definitely could do this one. Wait a little bit. Let's see if it pulls back below about 40 and reverses. That the buy point on it is 35.82, but really the key level is 42.49. That's the key level on this one, because that is the high that it made right before right before earnings in the first quarter last year. So so basically that 43.49 is a key level. We're pretty close to that. So let's see if it pulls back to that level, that 43.49 level, and then reverses. If it does, we could have a winner here. So very, very interesting. I'm going to put this down on my little list here. I'm going to put 43, 43.49. 49, that's a level. So I want it to pull back below that level, reverse, and then you always want to buy it as it's moving higher. So thanks, Mega Homes. That is a great question. Let's look at some more people that are joining us on TikTok. Thank you very much for waiting. Let's see. Okay, here we go. Any opinions on WOOF Petco? Woof. I like that name. Woof. That's a good one. Oh, let's look at Petco. Well, if all else fails and the world is coming to an end, you can always love your pets. So that has a good Petco health and wellness. I'm sorry. That's funny to me. All right, it's an IPO. Yeah, a little bit too early for this one. It's got a relative strength of 5, but it doesn't really count when it's an IPO like this, because it's literally just come out of the box. Here's the thing, and you're probably not going to like me saying this, but I think you got to wait at least a month on this one. But this woof is okay. Provides pet care, wellness solutions, products and services to improve lives of pets and pet parents. Okay, well, I like that. You know what? Here's the thing on this. It's pulled back pretty strong. It moved up and then it pulled back. You know what? You got to wait on this one. You got to watch this one. You can't buy this one right now. It's just too speculative at this point. But I like the industry. I people love their pets. They absolutely love their pets. So this is, possibly a really good area. Well, here's the thing. Just that a little bit. Here's the thing. You got to watch this one. This is just too early. This is just too early to do anything with this one. But this is definitely a watch list, and I definitely think you could do well on this one. So there we go. Let's look at AMC. Thanks, Will. AMC is one that I would. This is, here's the thing. You're probably going to hate me for saying this, but I wouldn't be an AMC even if I thought I could make. Yeah, okay. This is a classic short squeeze. Okay, we're just going down, 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 and then boom! It just moves up to $19. Would I buy this thing? Gosh, you know what? Probably not. Okay, probably not, because I do think this thing can come down to earth. Now, would I have predicted this? Well, I wouldn't have. This is definitely a climax top. Here's the thing. Here's the thing with AMC, and here's why I probably will not be a buyer of this one. It's even to be considered. It has to move above 20. Why? Because this is its high. So, I think with this one we got to be super careful. I do think it's going to pull back. If you're in this one, here's what you do. Let's say you got in this one. Let's say you're just doing super good, and you got into this thing at 4. Well, what you want to do is you want to keep setting your stop loss up. So I would set my stop loss up right about here, so that if it pulls back, I take all the money. I do think this one's going to pull back and readjust after the shorts are basically eliminated. I think that's what's going to happen. Oh boy. What stocks do you manage for short term and long term? Well, that is a good question. I do think long term, I think Tesla. I really believe it. Right now, it's going to have earnings, and it's probably going to pull back a little bit. Let me just see how that's doing. I know it's expensive, but I do think, at least in the near future, it is going to be changing the world. Okay, it's pulled back a little bit, as I suspected it would, and that's why I sold a lot of my positions today. It's at 846. We'll see how it, how the earnings call goes on this one. This one may be lower tomorrow. This hasn't done anything, so we still have resistance on this one. So we may have another buy. May have another opportunity on this one. Here's the thing with Tesla. Even if it pulls back, I think if it moves above this level here, about 1885 or so, then I think you want to buy it. But there's nothing wrong with this. It's just pulled back to the 10-day line. I suspect that it probably will bounce off this 10-day line or will bounce off this 21-day. And then, it might not be a bad time to get back into it after it's bounced off this line. So let it pull back a little bit, and then as it accelerates a little bit more, we might be able to make a little bit of change there. We do have very, very small volume, though, on the selling. So that leads me to believe that it's probably going to try to move through the resistance at 185. So that's one that I would say the long term. Short term, I just think you got to watch the show. I will try to bring up as many good opportunities as I can. Right now, I see some good action on Palantir. I'm going to bring that one up. PLTR. I'm in Palantir, and it's just been moving very nicely. I still think it has a lot ways to go. Here, it's got a 98 relative strength, and we had some very nice movement today. $3.85 up. So I'm definitely in this one, and I think that this one might be for a short term. This one might be good. Now it's a little bit tough to buy at this level. It's a little extended, a little bit more than I'd like to be, but this is what I like in the short term. So long term, I really like Tesla. Short term, Palantir. So thanks for the question. That's a great question. All right. Well, I have wasted on okay, let's see if I do one last question, because I'm sort of at the I'm sort of at the end of today. Unfortunately, I did get to everybody. I get going so much that I don't get to everyone. I hate that. Hey, Michael. Hey, Jim. Looking into the market, can you recommend 5 to 10 short-term or long-term stocks to dabble in? Wow, Michael, that is a great question. Here's what I'm going to try to do. I don't have an answer for you right now, but I would rather recommend that you sign up for the Action Trade Alerts, because I'm gonna be probably putting out something on the Action Trade Alerts for this. So it's real easy to do. All you have to do is basically go to the to subscribe to the website. Just I'm sorry, that's the YouTube. I also like you to subscribe to that, of course, too. But the sign up for the free for Action Trade Alerts, it's really, really easy. All you have to do is go to www.Dallas Trading Floor. And if you're looking on TikTok and you want to see this, I have this thing called Action Trade Alerts, which I go into more depth than I can on the show, and I'm going to try to get some potential stocks that might be worthy to look at, and I'm going to be putting those out. But you got to be on Action Trade Alerts. It's easy to get to if you're on TikTok. Just go to my profile, hit the link, and you'll see a sign up for that. Also, I have also subscribe to the YouTube channel for some of my trading videos as well. So it's an hour, and I would love to go on for another, but unfortunately I got to cut it short, and for at least for today. But I'll be back at 2:30 tomorrow. So until 2:30, let's see just make sure that I get everybody that I can here. Let's see. What's your net worth? I wish. Chart this way. Okay, I will probably do that next time, but I will get back to you tomorrow, 2:30 Central. Happy trading. I hope everybody's staying safe out there, and I will see you tomorrow. Thanks again.